All right, Helene, we just got the room opened up here for today's show, an edition of Trade of the Day Live. Welcome, everybody. Really excited to have you here. Obviously, another consequential day for markets. Helene, we have a lot to talk about, particularly, surrounding yesterday's trading session. I know we have some commentary around that. We put some posts out there on social media with that. Definitely want to hop into that. Look at some of the market internals as we have been, because I think that's a really good look into what this market is doing. And of course,
Mhm.
hop into our trade ideas, and then also, too, most importantly, start hopping in to everybody else's trade ideas and tickers that you all brought. So make sure to have those queued up, everybody. Really excited to hear which tickers you want us to look at later on. But all that said, Helene, welcome in. Happy Tuesday. Excited
Happy
to
to,
be here.
yeah, I'm excited to be here too, Blaine. Let's get into it.
Yeah, absolutely too. I just want to first also just shout out some of our regulars. I see Dave, I see Dell, Frank, I see
Leo.
Leo, John. Welcome in, everybody. Really excited to have you all here. Go ahead and say hey in the chat if you're tuned in and listening. Thank you so much for being here in the room live with us. But with that, I'm going to go ahead, open up the share here, and we can hop into our first chart because I know, of course, we have some commentary around just the market and the trading action here recently. So,
Mhm.
Helene, of course, we have the chart of the S&P 500 here pulled up. We've been very, on top of the moves here lately. Talking about, kind of the breakdown we've had, at the headline index. It's also, of course, certainly, affecting the equally weighted index. Regardless of which of the major U.S. indexes you're looking at, they kind of all having the same story here of late. But we're focused here on the S&P right now. That's just kind of the one we always like to look at, of course, as many of our regulars know. But continuing to see that series of lower lows and lower highs. That's very clear. We did have a pretty nasty sell-off through Wednesday, starting Wednesday through Friday of last week. We got back to pretty short-term oversold session, much like we had done the week prior. So very similar setup, just like as we came into last week. We were short-term oversold. You can see that as our 5-day RSI. Got way below 30. It got all the way actually down below 20. So it kind of set us up for a bit of a short-term bounce heading into the week. So we got that last week. Ultimately, ended up seeing the index sell off a bit further and got right back down pretty quickly, to that oversold in the very short term status. So again, it was a very similar setup lane coming into this week, and that's exactly what we saw yesterday. We saw yesterday's
Yeah.
action. We were up about 1% on the S&P. Of course, everybody likes to see the indexes up as a long-term investor. From that perspective. But other than that, there was a lot of things that we really did not like about the session yesterday. It was really kind of uninspiring. We closed
Blaine,
just near the
Blaine,
session lows. What were you going to say, Helene?
before we get into that, can you zoom in so we can see the price action a little bit better? It's really
Sure
tough
thing.
to really break down, those
Yeah.
last days.
Absolutely. Let me tighten into a 3 month time frame here. You probably can see a little bit better. So,
Okay.
of course, there was Wednesday through Friday of last week. We broke through some really key levels of support there. Closed way below the lower counter channel. Again, that was setting us up for that, short term oversold, get the oversold bounce heading into the week. And so you can see yesterday's session right here. So, we opened higher, of course. We rallied up earlier in the day, ultimately ended up finding some really, a high level of resistance. The buyers wouldn't keep buying up the market any further than there, and ultimately ended up closing near the lows of the session there, Helene, which sets up, for a bar, a candle, which printed on the charts yesterday, something that we like to track quite closely. Helene, do you kind of want to comment around that?
Yeah, absolutely. What we saw was a bearish hammer. That's what we saw there yesterday. And what does that mean? It means we opened for the day, we traded higher, but then that rally completely lost steam. We dipped right back down to the lows of the day. So the open and the close are both near the low for the day. It just shows that we had a failed rally, right? If it were to be a successful rally, we would be closing near the highs, but that's
Mhm.
not what happened here. We closed near the lows. That is going to be what we would consider a failed rally, that bearish hammer that we would say is going to most likely mean that we're going to trade lower in the short term.
Yep, exactly right. Yeah, so we saw that yesterday, and really all of the U.S. major indexes had the exact same thing yesterday. Helene, we had you had that intraday rally. It fizzled out. It failed, closed near the lows of the session. So we put out some pieces yesterday. Some social media posts saying, "Hey, don't trust this rally. We really don't think that we're going to be up tomorrow." There's been just about an hour ago, the markets did try to get constructive and kind of all just moderately turn green. I think all of them are back now in the red, just moderately. But again, you can see the range that we've traded in here today, Helene. Most of it's been in the negative here. Most of it's been below the closing point of yesterday. You can see that just with we opened lower. Most of the trading is taking place down there, and seems like we're heading back lower yet again. So just from a technical perspective here at the index level, Helene, nothing so far. I mean, we're still having this very clearly defined line of resistance here above the markets. It had been the 20-day EMA here, the middle counter channel. It's actually lower than that. So, it's not even trading up to the middle counter channel anymore. It's just kind of, if you just follow these series of lower highs down, you can see where the index continues to find overhead resistance there. So we haven't been able to crack that level of overhead resistance yet. We have again broken some longer dating support levels, that we were certainly hoping to see the market be able to hold and stay above. We did break down below the 200-day moving average. So technically, I think Helene, I think all the signs still point that there's probably some further downside to go.
Yeah, Blaine, I couldn't agree more. I mean, I don't see a reason why we would rally or be, in this correction bottoming out. There are just too many variables right now. It does look like when you just zoomed out that we are nearing that support that was last seen. When was that, Blaine?
Yeah, so we took it out on Friday. We have popped back up above it. So it's the November low from last year, which is very close also to the October low from that date there. So we are back up above that level now. So, we failed the test on Friday. We've popped back above it here. We'll see throughout the rest of the week if that level holds. It seems that the market's kind of grappling with that level right now, but we already have punctured it. Again, still we haven't seen really any sustained momentum to the upside. So what that would tell me is that we are likely to continue to break down below it, but still remains to be seen. So we're still above it for right now, but certainly still a level that we're watching pretty closely. And again, it's roughly, call it 65.30 is roughly about where that closing low dating back to November is. So you can see we traded down through it today, bounced off of it. But certainly a level we're continuing to watch pretty closely. But Helene, anything else you want to comment here? Just looking kind of the macro picture here, looking at the headline index.
No, Blaine, I think that you've covered it. Yeah, I think as you said, confirmed bearish trend in the short term. Waiting to see what might cause the bottom or the maybe just sideways action from here, right?
Yep. Yeah, possibly. We definitely a lot of things going on. Still a very headline-driven market. We're kind of absent a catalyst, so it's probably going to be a headline one way or the other. It's kind of impossible to predict what the headline might say. It's certainly going to be related. I would anticipate to the conflict in the Middle East and Iran, energy markets, something related to that. That's probably what's going to swing this market one way or the other. But with that said, I do want to go into our next chart here, Helene. This is one that we like to look at from time to time to really make a point of. It's one we like to track a lot, but we don't always talk about it here. This is one of our favorite market internals charts here. To kind of really look under the picture of what this market has been doing. And so what this is, folks, is the advanced decline line specifically for the S&P 500 index. So simply what this is meaning, the line here, all this is trying to graph out and chart is of the S&P 500 stocks. So those 500 names, whether they're net advancing or net declining, on any given day. So this isn't the volume; it's just simply whether the number of stocks is increasing or decreasing. So you can see here, you can see, of course, when it's starting to rise, that means more S&P names are continuing to trade to the upside. It's a really great breadth indicator. It means there's broad participation on the upside. Of course, when you start to see it start to trend down, as you can see a couple examples of here, it means the inverse. It means that you're having, weaker breadth. There's more stocks falling than there are rising. So you can see overall, of course, over the past couple of years, we've been in a really strong bull market for the S&P. You can see a very nice uptrend in the longer term here. You can see, of course, here just in the past couple months, certainly since the beginning of March, you can see a lot of the deterioration that we've been talking about here. Under the surface, as you can see, this has really reversed quite sharply to the downside, making a very sharp series of lower lows and lower highs in the short term. But I did want to note this, Helene, because I found this rather interesting. Looking back there's this upward sloping trend line here of support, this support trend line here. You can see that it's traded down to on several occasions, dating back all the way. I mean, you could even say from early 24. So here, there, you can see here in early 2025, when we were having some of the tariff sell-off and some of the concerns there. Again, you can see that it traded down to the support level here. Of course, in the November sell-off here, it traded down to this line almost exactly to the penny. And now here we are very, very close to it here. So
Interesting.
again, I still think that technically, just looking at the index lane, I think that it points to the downside, likely some further downside to go.
Mhm.
But I felt, that this is a very interesting chart. If we see it continue to hold support here on the advanced decline line, I think that could be very significant. Obviously, it has for the past couple of years. But of course, the opposite is also true. If we see it, crack through the support line and break down below this level, then that would certainly be another piece of evidence for the bears case. So just wanted to point that out. I thought everybody would find that really, really interesting.
Yeah, that's really interesting, Blaine. I love the insight.
Yep, absolutely. So, Helene, anything else you want to talk about, just broader market before we hop into our trade ideas?
No, let's go ahead and jump into our trade ideas. And guys, after we go over our trades, as you guys know, if you're regulars, then we jump into your trades. So go ahead and in the comments, put them in there. We want to know what you want us to take a look at. We'll also bring in that TikTok group right around the time we're done going over our trades. So definitely buckle up, get ready. We're excited to jump into it with you.
Yep, absolutely. So let's go ahead. So my trade idea for today, of course, again, as you can probably infer, at least here in the short to intermediate term, I have a bit of a bearish tilt on the market. That's kind of how I'm viewing things. Certainly that you could change relatively quickly, but I think that's just what the technicals are telling me. I'm following my discipline. That's what we do. We're technical traders. So I'm still anticipating a little bit further softness in the markets. And so because of that, I'm starting to look for some of these stronger bearish opportunities out there in the markets. And so this is, one that I've been tracking for quite some time. I don't think I've mentioned this one on here on TOD Live previously. But this, of course, is for COF. This is Capital One Financial, one of the major credit card companies, big credit card network company here. They actually, do own the credit that they put out there, so they do have some credit risk here. So interesting angle there. But you can see clearly the stock, peaked out earlier this year. It had a really nice trend going for much of last year. Had a great rally from the November lows through December into the first couple weeks of January of this year, and then it ran into very, very stiff resistance. Had a huge gap down. Shortly after making those all-time highs in the stock there, you can see the big gap down there. Continue to confirm that move to the downside. Shortly thereafter, we got the trend line to flip, giving us that profit surge sell signal here. So you can see the trend line slipping there with our 21-day drop and below the 63-day. That's our red and green lines here. Very clear series of lower lows and lower highs. The stock had some very significant support dating back to last year. You can see it traded down to roughly this level on 3 different occasions between that 200 to 205 level. Stock cruised right through it. That support level did not hold up. It's broken down to about 9-month lows here just in the past couple days. Of course, we did get a big bounce yesterday. Ultimately ended up failing. It traded right off of that middle Keltner channel and actually finished near the lows of the day. You can see it's moderately in the black here today. But still most of the trading session has been down on the day. It opened lower. It's tried to get constructive here, but again, really not too inspiring of trading here. It doesn't signal to me that there's a turnaround in progress just yet. I think you're probably still going to see some further downside in this one as well. And also too, because of where it's trading, it's above that above that lower Keltner channel. The RSI is not too oversold in the short term. So I think this is presenting a really interesting short term, or even potentially maybe a little bit intermediate term play on a bearish trade here. So whether it's purchasing a put option, selling a credit spread, purchasing a put debit spread, some play like that, some type of trade that's has expressing a bearish view on the stock. It's probably how I'd look to trade it. If I could find a trade, Helene, that was a put debit spread, that's probably be my preferred method. This
Okay.
is about a $200 stock, so just purchasing an in the money put outright. Could be a little bit too expensive. Just depending on how much time value are in those options. But that's probably how I'd look to play this one.